Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the latest news from the D Street, starting from the benchmark index action to sectoral moves and all the stocks that are on the move as well. We'll get you expert views to find out where exactly are they keeping their focus. They believe that outperformance can now start to happen, and where should you be looking at booking your profits as well. Of course, we will be looking at how should you be now viewing your investments in equity markets with the RBI governor's statements coming through, the policy stance remaining same, and the repo rate also remaining unchanged at 6.5%. But do you need to change anything with your investments? So we will discuss all of that as well. But let's quickly look at how the markets are trending at this point in time. 92 points of a jump for the Nifty. It's hovering near 19,637, been just in a narrow band of range right from the word go in the markets today. Right now, about 0.5% up move can be seen on the Nifty. The Nifty Bank is 0.25% higher in trade. The sectors that are doing well, again, realty space up by 1%, the top sectoral gainer. IT stocks up by 0.8% on the Nifty IT front. The broader markets, the small and the mid-cap 100 indices are up by about 0.5% today. Also giving it support, financial services, auto space stocks as well. The FMCG is saying some kind of a comeback as well in trade today. You can see as far as the Nifty gainers are concerned, it's the Bajaj Twins, Bajaj Finserv and Finance up higher by about 2.5% to 4% each. Titan also moving up by 1.5% higher in trade. Then you also have IndusInd Bank up in trade as well, ITC, HDFC Life Insurance, Infosys, Tech Mahindra, TCS, HCL Tech, all of these companies up in trade as well. As far as the broader markets are concerned, the Nifty 500 space, you do have a far and few between names coming in from various sectors, like Indigo continues its up move for the second day in a row today again. You have financial names like Cholamandalam Investment again up in trade today, IIFL Finance now up in trade too. Then you also have stocks like Godrej Industries, you have even HDFC Asset Management Company now moving up as well. So these are some of the stocks that are moving up. In the F&O space, however, you have the commodity major MCX as the top gainer, 5.2% higher in trade. And apart from this, you also have the Bajaj Twins, Granules and Bharat Forge as the top movers right here. Well, time to welcome our guest on the show. Very well-known market expert Anand Tandon now joins in. Very good afternoon to you, sir, and thank you so much for taking the time out for this discussion. We've just had the governor give his speech, and right now the press conference is underway, and he's been giving a clarity to, although his first few statements meant that you may just see this as a status quo, but it may definitely have much more. What should the market participants and investors really take away from what the RBI governor has really sent? Any kind of signals that would impact the market move over the medium to long term?
Well, Sakshi, thank you for having me. The RBI policy as such hasn't changed anything, as you mentioned. The caution on inflation remains more because of the fact that I think globally we are still looking at inflation nudging upwards, and therefore India cannot very much take itself as a standout country, because here also, if you see, most of one of the reasons why the CPI has remained somewhat muted relatively has been, or is expected to fall down further, is largely because of the government action. So it's not so much in terms of just the monetary, but also the fact that the government has increased subsidies in a few of the areas and so on. And there is an attempt to make sure that prices in terms of agri commodities, for example, do not go beyond a certain level by imposing export restrictions, etc. So the management has been both fiscal and monetary, which is good. But you cannot take your eye off the ball in terms of letting runaway expectations go up, as the RBI governor mentioned. There is, of course, now a slightly better anchoring of expectations, as the survey seems to indicate. So net, I think nothing has changed from a point of view of positioning. You have to keep in mind that the difference between the US and India rates now is among the lowest that we have seen for a very, very long time, if not ever. And therefore, to some extent, you have to also keep a watch on what's going on the foreign exchange side. Luckily, we are well positioned there. Reserve position is comfortable. So essentially, it becomes again a question of what is happening in the domestic market. We are getting into the festive season, so most of the focus will be on the consumption, auto, things like that, gold, jewelry, especially at the higher end, because there is still been a little bit of a laggard in terms of demand from rural India. And once if that picks up, then of course you have both legs moving in tandem.
Okay. So, sir, also wanted to ask you, we are just right ahead of the earning season as well. What are your big expectations there? Any particular sectors that are on your top watch list right now? Where do you see outperformance and therefore underperformance also coming through in this quarterly earnings?
In terms of earnings, I don't think you will see too many surprises. By and large, the expectation is that it will be a bit slower than the last quarter, but on a YOY basis, it will still be very robust, upwards of maybe about 15%. Major contributions in terms of growth will continue to come from things like Tata Motors and the banking sector. The OMCs will do well. Last year, they had done rather badly in this quarter, so on a year-on-year basis, they look fairly decent. So the earnings growth look reasonably robust. I don't see too much of a change in terms of sectoral shifts anyway. As I said, Tata Motors among the auto and most of the banking will be the mainstay along with the energy.
Okay, but we've also seen, this entire year, calendar year so far, a lot of sectoral rotation really take place. The broader markets widely outperforming. Do you want to see, share some kind of caution, in the markets right now for all the investors out there? Where do you see the markets have now peaked out in terms of several segments, and now it is better time to perhaps book your profits?
Well, the most excited sectors are the ones where the government spend is the highest. So whether you look at defense, railways, or even capital goods, which is a consequence of the kind of capex cycle that we are seeing right now, most of the companies will report reasonably robust numbers. But unfortunately, most of them are also trading as if they are going to see that kind of number growth in perpetuity. So if you are looking at valuations, there is certainly a matter of concern. At an overall level, if you look at the index, maybe it is just mildly over where you would find absolute comfort. But if you look at individual stocks, it becomes rather difficult to find stocks which are somewhat underpriced. And consequently, you are having to scratch the surface and go and look for a wider, broader set of companies where you may look at undervaluations. The key thing to note at this point is not to go down the quality curve. So you may look for smaller companies, but do not go down the quality curve, because if the market were to turn or there was any kind of liquidity issue that comes up, exiting the companies where there is a quality problem is a big problem. You can go wrong on the valuations in the larger cap or even the better quality companies and hope that you will make it up, whenever the market turns around. In worse quality companies, especially when the management or the business is not particularly robust, that doesn't give you a chance. So you're pretty much left with holding that thing. So it's not a very cheap market by any stretch. It's also a market where interest rates are giving you fairly decent returns. So therefore, the asset allocation focus is key. Don't go overweight on too much overweight on equities at this stage, unless you are already underweight, which most of the Indian private sector people are.
Okay. So also wanted to ask you, when we talk about, you've discussed a lot of stocks that have already shown a lot of uptick right here. But in terms of underperformance, those sectors that have not participated so far, do you think time has now come? I mean, sectors like IT and pharma have been clear laggards. Do you think participation increasing from these pockets now?
Well, IT, large cap IT is not necessarily going to report very great numbers. That said, you may still want to look at some of the companies in terms of, relative valuations and the fact that, they have, as you said, become far cheaper compared to where the rest of the market is, simply because they have not performed very much. Small cap IT as does continue to, or mid cap IT, I would argue, continues to report better growth, simply because most of the business that you're getting right now from the West has largely been focused on vendor consolidation and takeout trade businesses. So you buy out the whole team of corporates and then grow with them. So those kind of businesses continue to remain, and especially on the engineering services, some of the companies perform very well. So specific set of companies in IT, not the generalized IT services, can continue to do reasonably well. I mean, Persistent, for example, has shown remarkable growth both in terms of profit as well as share price. But it's not as if any of the companies are particularly cheap. So you as from a trading perspective, perhaps a Tech Mahindra or a TCS may be something that you might want to look at.
Okay. In the mid and the small cap space, although they have run up pretty sharply, do you still see any particular segments or stocks where you still believe there is enough value that investors can scout for?
Well, mid cap unfortunately is not a sector, it is just a size. And consequently, with the number of companies that can qualify as a small cap in particular, given that mid cap and large cap now make up only 250 companies, by definition, everything else is small cap. So if you want to find 10 companies which you think have particularly good growth prospects, it is not impossible to do that. But if you look at it as a overall, the challenge, as I said, is not to go down the quality curve and to make sure that you are really looking at the companies from the point of view of where the growth can sustain. So cyclical growth companies, for example, construction, etc., for now, will offer a little better value than, let's say, an L&T, because despite the kind of order book L&T has, etc., it's also fairly finely priced. I mean, it's not to say that L&T will not do well for most of the institutional players. There is no other chance. But a smaller company like an NCC, etc., may probably offer a slightly better kind of earnings growth potential for retail investors. That is, again, these are not recommendations. I'm just pointing out the kind of delta that you're likely to get in the earnings.
Okay, we're looking at this entire, high-spirited World Cup action now picking up even more pace. With Sunday's match, definitely everybody looking forward to it. I do not know how much of a cricket enthusiast are you, but with World Cup starting and then festive season following, are there any particular sectors, stocks that are likely to benefit most from this extravaganza of cricket that we are going to see unfold over the next 1.5 months?
Well, media, QSR, those kind of ones are the obvious one, but I think the more regular growth will be the ones because of the festive season, and that, as you are well aware, almost a third of the consumer business happens during this quarter. So the coming quarter will be good for most of the businesses related to consumers. So you may want, keep an eye out for consumer durables, automobiles, home improvement, and so on. But as I said, these are not new themes, nor are they themes which have not been explored. So one has to be a little careful about which particular stock one is looking at. But overall, this will be certainly a quarter where consumption numbers will be tracked. And if the numbers are, as good as they are expected, at least the earnings for this year is in the bag.
Okay, let me ask you to, just like how we used to do in school, fill in the blanks. I'm going to name 3 sectors. You have to add one to the whole list. Okay, PSU banks, defense, railways, and what would you add to it?
Well, this is an interesting one. I would think, PSU banks, I would extend that to banking in general, especially the private sector banks, because the frontline ones have not done that well. I mean, in HDFC, for example, though or so. So, if you have a 3 to 4 year view, I think that would be, for example, a great stock to be looking at.
Okay, great. Well, on that note, thank you so much, Mr. Tandon, for being with us on the show and discussing all these wonderful insights with all our viewers. Great to have you with us on Business Today Television, and hope to have many more interactions even going forward from here. Markets still holding steady, 0.5% higher in trade. Several of the sectors, market expectations will continue to be discussed all through the trading session. And of course, we will continue to even decode the policy from economists as well. So do stay tuned with that for that as well. Don't forget to subscribe to our channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.